Good morning, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, all eyes are now focusing on tomorrow's US inflation report. Today, however, Wall Street's main indexes are lower for the first time in 3 sessions, as caution builds ahead of that crucial data on inflation, a root cause of the recent sell-off. The expectation benchmark is 1.9% per annum, and variations will likely set market directions for a while. Meanwhile, the US dollar is falling against its main trading partners. Despite the recent bumpy ride, the new boss of the US Federal Reserve said today that the track of gradual rate rises will go ahead as he seeks to push to normalising. And has been alleged in a claim in both the SEC and CFTC that the widely quoted VIX Volatility Index is being manipulated. The host CBOE refutes the claim, saying it can't happen. American household debt in the year to December 2017 rose 4.5% to reach $13.2 trillion. The mortgage component, which makes up 68% of the debt, rose 4.5%. Car loans rose 5.5%, although they only make up 9% of the total. And credit card debt rose 7.1%, although it makes up only 6% of the total debt. Student loans account for 11% of that household debt, and they rose 5.2% in the year. On a population and inflation-adjusted basis, household debt is up 1.7% on real terms. US GDP grew 2.3% in the same period. And booming air freight and passenger levels are translating into improving profitability at airlines, a sector that has long struggled on that front, but is also drawing higher pay claims from staff. Embedded costs are rising, and that will make for a brittle future when the inevitable downturn comes. In Australia, however, the central bank says that it may be a while before their improving economy delivers meaningful wage rises. In New York, the US Treasury 10-year yield has paused and is now at 2.85%, awaiting that US CPI data. Measures of market volatility have settled back further today, and gold is continuing to move higher. This morning it is up to $1,327, another $3 rise. Oil prices are down, with the US benchmark now just over $59 a barrel, while the Brent benchmark is just over $62.50 a barrel. American shale production is growing faster in 2018 than it did even in the boom years of $100 a barrel oil between 2011 and 2014. That's according to the IEA. And this morning, the Kiwi dollar opens up nearly 0.5% higher at 72.9 US cents. On the cross rates, we're at 92.8 Aussie cents and 59 euro cents. That leaves the TWI at 73.9 and still within its 2018 narrow range. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.